Good afternoon. This is Tony Cherniawski with the Practical Investor, LLC. Today is November the 13th, 2008, and the topic of the day is out of control and highly emotional. Have you ever gotten the feeling that the markets can really get out of control? Well, today I did, and if you felt any different, bless your hearts, I don't know what you were thinking about. This market is really out of control. But there is a pattern that we can identify here, and I want to share this with you, give you some insight into it. I'm not trying to solicit you to buy or sell anything at all. In fact, if anything, for most of you out there viewing this, you might be just as well staying out of the market because this is going to be a humdinger. So let's get into the pattern and let's talk about what's developed here. First of all, the pattern that I've identified here is called the expanding triangle. The expanding triangle, or in other words, is also known as a broadening formation, is a pattern in which the price swings in the market don't diminish as they do in a pennant, but they broaden or get larger. And by the way, the price patterns also have much more volume with each swing in the market. So it gives the false impression, for example, on this upswing, huge volume today. Man, it looks like this is the real McCoy. This is the market I can buy into because there is volume. Now, the other thing that you can look at is that this volume will continue for a few days. So up till now, most of the time, we've seen upswings with high volume for a day and then very little follow-through. In this case, this is what's going to bring people in. This is a true sucker's rally here because we're going to have high volume for 2 or 3 days running, and this is going to bring people in droves. And unfortunately, it's going to shatter a lot of dreams as well. Let's take a look at the different indexes. The first one is the Standard & Poor's. What I did is I retired the old pennant formation. This is actually a derivation or variation of the same, but it's a lot more volatile and it has a different kind of twist to it. A pennant formation has declining volume into the end of the pennant. This one has rising volume going into the end of the pennant. So there is a major difference here. The swings get broader, not narrower. And there is a high degree probability that the swings will actually take us through the top of the triangle in the end. So let's go back, identify this again. Wave 5, I've identified going through. This is not a mistake in my drawing. This is a high probability event. Unfortunately, I should have also drawn another zigzag there with wave 5 ending somewhere underneath the triangle because that is also a possibility, although less than 50%. So we can see the market fail sooner than reaching the high apogee that I have listed here. So let's go back to the industrials and we can see the same thing. Notice that we went down to 79.66 in the Dow from right around 82.88. So we're talking almost a 300-point, nearly a 300-point drop, and then on top of that, we closed up 662 points. So we closed up almost 1,000 points from the very bottom. Very interesting situation, wouldn't you say? What we have here is a situation where we've had very high volume. That's one of the reasons why I believe if we follow through with high volume again for another day or two, we could go right through the top of this at above 10,000 on the Dow. But remember, when this swings back down, we're talking about a swing back down that's probably going to take it down to 7,200. Which will challenge the 2002 low. So this is going to be a wild ride here for a lot of folks. What we have also is the NASDAQ 100. Believe it or not, here we go. The NASDAQ is also expanding out, and we're going to see the same kind of expansion of volume and out of control, basically, in the NASDAQ as well. So all of the domestic indexes are now out of control, and let's just talk about that for a minute. if you improperly diagnose this pattern, and I'm sure there are some of you out there that did, I certainly wasn't ready for what happened this morning. If you improperly diagnose this pattern, it can cause you severe financial pain. There's no way to anticipate this. Please understand, when we were anticipating the contracting pennant formation, we didn't have room. In fact, a decline below the 850 on the Standard & Poor's, for example, simply said this pattern is no longer valid. So here we are with another pattern that's a close a sister or cousin to the pennant, but much more volatile. Okay, so there can be a loss of control by the investors as well. So the one thing to do is when you get into something like this, you need to apply one of the strictest rules of trading, and that is the old adage, when in doubt, stay out. This may not be a pattern, by the way, that you'll want to chase. Now, it's possible if there's a pullback, maybe there might be an opportunity to go long here, but really this is not something that you want to chase, especially going into the end, because what we'll see is an apex of emotions. The emotions will reach a peak that'll probably be unbelievable. I wouldn't even turn on the TV set after this, because people will just be going crazy over the market recovering. What a wonderful thing. But this is emotional. Remember that. The markets are very emotional. There's a high charge of emotion there. Try to keep your sanity, and in some cases it may mean just staying out. So the lack of a clear pattern formation is an ultimate no action indicator. Please take that to heart. And what we see here is something that, by the way, is usually seen at market tops. We had a modified triangle in the NASDAQ last year, an expanding triangle, and that was a very interesting one because it occurred at a top. The last time we saw a major index having an expanding triangle was the Dow back in 72 and 73. That also was an expanding top. But these things are very rare, and they're usually at the top of the market. That's what's so unusual about this. A pennant would have been better placed here because it's, remember what I did in the prior video saying flags at half mast. This is still what it is. It's a pennant, flag at half mast. The ultimate turning point is going to still result in a very severe decline afterwards. So without much more explanation than this, I hope I've done a good job. I hope I've scared a bunch of you out of the market because, especially if you're short, this thing is going to cause a huge amount of pain. And for those of you that are long, bless you, you're probably going to benefit from this. But this is not a market to chase unless you've got some clear exits, and maybe even then that might not help you. Now, the ultimate end of this triangle pattern is probably going to be some very bad news. I know we've been rallying on bad news, and this is what puzzles people. How can you rally on bad news? The fact is, markets get oversold. They come down to a point where either, number one, the buyers become interested again, or number two, in this case, we may be talking about the President's Committee on Financial Markets doing a number on us as well. Remember, this is a G20 meeting this weekend. It's very important for them to look like they're in charge. This may not last either, so just be aware of that consideration as well. So without any further explanation, what I'd like to do is just say I can be reached at TonyC@thepracticalinvestor.com. I hope you play it safe here. Be very, very careful and do the right thing. And thanks for entertaining and watching my program.